There are several ETFs I want you to take note of, and this is how my traders play this dynamic. DGP is the predominant item we use to be long gold. DGP, David, George, Peter. Right? We began accumulating DGP around $14, $16 an ounce. It's currently close to $50 per share. But what I'm going to teach you which items to focus on, and then I'm going to give you a strategy for knowing when to buy the items. Now that's pretty much a big part of the whole enchilada. What items to play to protect yourself, and when do you buy them? So if DGP is how we play gold, the only thing you need to know is when do I strike, Oliver? And when do I take partial profits? All right? SLV is how we play silver. Now my traders and I began accumulating SLV around $11, and here was the spike that occurred close to $50. Our last sale of silver was around $45 an ounce. All right? I believe silver drops back below $30, at which point we began another aggressive accumulation. But this is the item we use to buy silver. The only question is, when do we strike? I'm going to go over that. Palladium. All right? Look at the rise. All right? It's how we, PALL is the item we use to play palladium. The only question is, when do we strike? The moment you take capital and you put it into SLV or DGP or PALL, you are transferring a shrinking asset to something that doesn't shrink through the paper version of it, though. It is like taking an ice cube and switching it to a brick of gold or a brick of silver. Now, I'm not one of these bugs that say just buy it and hold it forever. No, there are times to take profits because this is, after all, the paper world. So foreign currencies. So we know we place silver, gold, and palladium through the ETF versions. Foreign currencies, the best way to buy into the rising economies of other countries. I want you to take a look at this. This is a very important ETF. It is essentially the ETF that tracks the US dollar. The symbol is UUP. UUP. Look at UUP from July of 2010. Look at the pattern. Going somewhere in a hurry. Yes, down. Now, look at the pattern of this. This is probably one of the most important ETFs I want you walking out of here with. This is the reverse of the US dollar. It's the bear index. It means UDN is an item that you buy when you are bearish on the US dollar. If the US dollar erodes, your wealth increases. So you take dollars and put them into UDN, and if dollars are eroding, your wealth is increasing along with the erosion of the US dollar. This is how you transfer a melting asset into a rising asset. You're a winner if you transfer a melting asset into something that doesn't rise but doesn't melt either. You're a double winner if you transfer it into something that rises. So UDN is how we play an eroding dollar on the long side. The reverse of this, holding dollars, is this. Holding UDN is this. The only question is, when do you strike? When do you go in heavily? And when do you take partial profits? When do you go back in? When do you take partial profits? We'll cover that momentarily. Look at this ETF. This is the ETF of the Swiss franc. Now look at the pattern. From July of 2010, look at the trends of FXF, the Swiss franc. If you simply held your dollars in this ETF in your trading account, if you simply held FXF, your wealth would have increased instead of this. That's holding US dollars in your trading account. You can also hold the Brazilian real over the same period. If you simply took your cash and put it into BZF, you would have simply increased your wealth instead of this. The Japanese yen, increase your wealth instead of this. And of course, the Australian dollar, increased your wealth instead of this. It's simple. Most Americans have no idea that there are protective measures that can be taken with other currencies. And you don't have to leave your trading account to do it, because we have paper versions of these things. So I have a program where my traders look to play the Chinese yuan. These currencies. The key currencies that often offset the dollar's decline are the Swiss franc, the Australian dollar, the Canadian dollar, the Japanese yen, the Chinese yuan, and the Brazilian real. Now, if you have the ETF versions of these things, and you now need a strategy, okay, when should most of my capital be in the Brazilian real versus the Swiss franc? When should a bigger portion be put into the Australian dollar instead of the Chinese yuan? When should the balance of this currency ETF portfolio, when should the balance of it actually be in, I don't know, the Canadian dollar? All right? So the question is, once you know what to play, when do you trade it? When do you buy it? When do you sell? There might be times where you're coming out of the Brazilian real, or a good portion of it because the profits were nice, and putting it into the US dollar. There are times when you might be so bearish on the US dollar that you go long UDN. And there might be times short term that you're bullish on the US dollar and you buy UUP. It's time to become a currency trader. This is the new reality of our world today. All right? And there's major wealth to be had with just a few simple strategies. So these are the currencies that we should focus on trading, and these are the currencies to predominantly stay away from. The US dollar, the euro, and certainly the British pound. Okay? Now, here's a firm, obviously, I'll take a question in just a second. Here's a firm, obviously, that helps you do that. All right? This firm, WealthTrade FX, allows you to hold your cash in any one of these currencies. All right? You can hold your open cash in these currencies. What I love about this company is that they will give you anywhere between 50 to 100 to 1. So $500 gets you $50,000. $1,000 gets you $100,000, $1,000. You can do a lot of damage with that. All right? All right, let's talk about this. And some of you certainly will. All right, real Velez wealth trading results. Guys, very quickly. These are some of the results of some of my traders who have actually put these things in practice. 65% in 6 months. Oliver, I'm delighted with my outstanding results in just 6 months. All right, my retirement account up 65%, and that does not include the profits I made following you on Facebook. Yes, I do share a lot of my trading ideas on Facebook. Oliver, in 4 months, my gains are 32%. Check this out. I started the program in June of 2010, and I'm up 145%. I am up 159% since starting. This trader makes $1.6 million on a single trade, right? It was so amazing we had to interview him. If you're interested in receiving that full interview of how a single trader made $1.6 million following these strategies, email jay@ifundtraders.com. He'll send you a copy of that interview. Now, there are 335 wealth traders. We're changing their lives every day. I want to give you a copy of this presentation. I want you to email wealth@ifundtraders.com for a full copy of this presentation. Every single slide is yours with absolutely no obligation. Now, let's talk about a strategy that will help you know when to play these things and when not to. All right? When to play them and when not to. All right? I want you to take a look at these 3 bars. I teach every trader that there are only 13 bars the market creates over and over again. It has 13 letters in its alphabet, and these letters are repeated over and over again. Of the 13 bars, these are the only 3 bars you need worry yourself with. I have silly names for them, but these 3 bars fall into 2 broad categories. And I want you to think in terms of animals here. Elephants and tails. There's bull elephants, which are long, solid green bars. And then there are tails, which are simply long stems at the bottom. There are bullish versions of elephants, green and red. There are bearish versions of elephants. Bear elephants are long, solid red bars. Bull elephants are long, solid green bars. Bottoming bull tails are at the bottom. Bear tails are at the top. It doesn't matter what color or whether there is no color or green or red. We're talking about the tail portion at the bottom is all you need worry about. So if there is a relatively long tail at the bottom of green, that qualifies as a bull tail. If that's a long tail bar at the bottom of red, that qualifies as a bull tail. If that's no color, it still qualifies as a bull tail. So the top or the head means nothing. Just the tail portion is the important thing. So elephants and tails. Green is the bull, red is the bear. Bottom tail is the bull, topping tail is the bear. My traders are taught whenever one of these bars shows up in the Canadian dollar, you buy it. If a bottoming tail shows up in the Brazilian real, you buy it. If a bull elephant shows up in UDN, you buy it. These are the only bars we dump our money into. And we simply wait for them to reveal themselves. So this is one of the ways we know, Oliver, when do I buy silver? When one of these bars shows up. Oliver, when do I start accumulating gold? When a bottoming tail forms or when a bull elephant forms. These are the bars that answer, when do I strike? Yes, sir. All right, good point. Time period. What kind of trader do you want to be? All right? I would say stick predominantly with the daily chart if you're looking for several week to several month moves. The daily chart is your primary focus. But can you trade this on micro time frames? Of course. This concept applies to every time frame. You want to focus more on the weekly time frame? Then wait for one of these bars to show up on your weekly chart. Daily time frame. Wait for one of these bars to show up on your daily chart. Now, tails are nothing more than former bear elephant bars that have completely turned around. Now look at this. Red is eroding. More red is eroding. More red is eroding, and then the full reversal.